All right, good morning, guys. Let's get a quick sound check going. Good morning, Kurt, Lorna, Briggs, Russ. All right, guys, good to go. So we got a little slippage in the futures this morning. NQ down about 0.6 and the S&P's down about 0.4. And I think a pretty important dip as far as how do the bulls handle that dip. All right, they made a lot of progress last week. The dip here will give us a good sense of whether or not they can defend that progress. So a couple levels here for the NQ. One big spot for the bulls to defend would be that daily 50. Right around 18,095. If they can't hold that daily 50, I think at a bare minimum, they have to keep price above that daily 21. If they break it back under that daily 21, they've given back pretty much all the progress from last week. And like we talked about on Monday, we've got a lot of 3-day squeezes setting up. SPX, QQQ, IWM, the Dow, Amazon, Nvidia, etc. If there's a path higher from those 3-day squeezes, they've got to protect that progress they made last week. And if we check out the lower time frames here, we got a 5-minute, 15-minute, and a 30-minute sell signal on the NQ with an early sell signal here on the hourly. And they just fired that hourly squeeze short. So based on the lower time frames, there could be room for a bit more downside today if they can't keep price propped above that daily 50. And then jumping over to the S&P futures, down about 0.4. We got a sell signal on the 5-minute, 15-minute, and the 30-minute with a squeeze on the 1 hour and the 2 hour. And very much like the NQ, we've got the early sell signal here on the hourly. So key levels for the ES, pretty much the same spots. Daily 50 around 51.75, and then the 21 EMA around 51.50. If they lose that 51.50, doesn't mean the 3-day squeeze can't fire to the upside eventually. But the idea of that happening anytime soon, I think it's a little bit tricky. So the key for today, can the bull skis defend the progress they've made? And a big part of that will be the big boys, right? Amazon, Google, Nvidia, etc. So for Nvidia here, got a key level in 900. They're going to gap down to about 894. So $5 or $6 below that 900. And Nvidia's got a 2-day and a 3-day squeeze. So if we go take a look here at the 3-day squeeze, for the most part, it's pretty bullish here ahead of earnings, with earnings on the 22nd. Structure looks pretty good. Alexa, off. What are you doing? Hang tight, guys. Alexa's getting all worked up over here. Alexa, stop. Alexa, stop. Alexa, play Bob Marley. My goodness. All right, sorry about that. Yeah, 3-day squeeze on Nvidia. For the most part, pretty bullish. Structure looks good. We got the slingshot signal. We got a 10 out of 12 on the big 3 score. The thing is, if that daily chart breaks apart a bit, if they can't quite hold that 900 level, it's going to take a little bit longer for that 3-day squeeze to fire to the upside. So I think by the end of the week, if you're looking for a path higher here for Nvidia in the short term, very important they keep it above that 900. And then Amazon's pretty much in the same boat, albeit a little bit stronger. They just fired this daily squeeze, but they're firing it right under the recent highs with a 2-day and a 3-day squeeze coiled up. Looks like Amazon's going to gap down maybe a buck or two. I think moving forward, if they can get 1 or 2 closes above that 190 level, we should get continuation higher from that daily squeeze. If we can get continuation higher from that daily squeeze, then they can wake up the 2-day and the 3-day squeezes. If they can wake up the 2-day and the 3-day, there could be a path here into about 195, 200. But as always, it'll all come down to the QQQ. So if the QQQ can protect the progress it made, and then we can finally get that breakout here above that 190 for Amazon, I think you take that triple squeeze setup and you look for another $5 to $10 higher, but only if the QQQ can hold up. And then Google's been a gem. Now, no bigger squeezes here on Google as far as a fresh squeeze, but they did just fire that weekly squeeze about 5 weeks ago. So in most cases, firing that weekly squeeze should open the door for a path towards 175, 180. Again, if the QQQ can hold up, I think Google's in pretty good shape for another $5 or $10 higher. The Qs break down, the idea gets a little bit trickier. So I like Google, I like Amazon, I like Nvidia. Let's go take a look here at Apple. And the question for Apple today, can they defend that 200 SMA? It's not my favorite setup. It's a little extended above that 21 EMA. There's no fresh daily squeeze. What they do have, however, is a brand new 2-day squeeze. 2-day squeeze and the early buy signal. I think the key here is defending that 200 SMA. That gap up after earnings, that puts Apple back in better standing. Weekly chart gets cleaned up, back above that weekly 21, back above that weekly 50. So I think moving forward, if they can keep it above that daily 200, they might take that 2-day squeeze, and they might be a bit more upside. If they break that 200 SMA, there might not be a path higher here in the short term. And then for Meta and Microsoft, Meta wouldn't be my favorite. They're trying to make some progress, but I think until you get 1 or 2 closes back above that 21 EMA, it's a little tough to want to swing trade that to the upside. And then on Microsoft here, it's a little bit neutral, but much better than a few weeks ago. Back above that 21, they've canceled out the sell signal. It's a little bit neutral. So there's the big boys, and I think as far as Nvidia goes, we have earnings at ARM tonight. That could play a role as far as the immediate path forward here for Nvidia. So keep an eye on that after the close. And then as far as trades on my end this week, let's recap the Amazon trade because I think a good example of the power of the multi-squeeze. So going back a few days ago, now most importantly, we're under that 190, but we're not directly under it. Going back a few days ago. So there was a 1-hour squeeze and a buy signal, nested inside of a 2-hour squeeze and a buy signal, inside of a 4-hour squeeze with an early buy signal, all of which was setting up inside that daily squeeze right around that 186-ish. We took that 2-hour squeeze, bought some call debit spreads, and we cashed out on Monday. We came into the trade looking for $1.90. $1.89 felt like close enough for government work. So we took that off for about a 30% profit. And then we picked up some lemonade on Monday. And so far, lemonade's been a bit more of a chop fest. I do like the setup. Good looking daily squeeze, good structure, buy signals. If they can't hold that 21, so call it a move below 17, I'll take off that trade and move on to the next one. Ideally, they keep it above that 17 and eventually fire that 4-hour daily, 2-day, and 3-day squeeze. So I like the setup. The only thing I don't love, it's not a name I would typically focus on. You're not going to find me trading too many $20 stocks. The nature of a $10 or $20 stock, what's the correct word? They can be a bit spastic. They'll be up 4%, they'll be down 2, they'll be up 3, they'll be down 5. Where the Amazons, the Googles, etc., they tend to work a little bit better. They tend to work as advertised. So I'm long LMND, and then I'm long energy for August. Now, as far as energy goes, it's got the perfect monthly chart. All that monthly chart does, with a buy signal, good structure, a squeeze, all that does is just set the stage for what could be a really nice push. A push towards 104, 105. So you kind of look at that as a ticking time bomb. Now the question is, can all the time frames below that monthly squeeze, the 1 hour, the 4 hour, the daily chart, etc., can they light the fuse? And as far as lighting the fuse, it's a little bit sloppy at best. The daily chart is very neutral. Back down at that daily 50, there's a 4 hour sell signal, and then the 2 hour, 1 hour, 30-minute, and the 15-minute are neutral. So the name of the game is multi-time frame alignment. You can have the perfect monthly squeeze, which I think XLE, ExxonMobil, EOG, Oxy, etc., they've all got a perfect monthly squeeze. They can do nothing with that monthly squeeze until all the lower time frames shape up for a move in the same direction. So at a minimum, what I'm looking for, 1 or 2 closes back above that daily 21 and a fresh daily buy signal. If I can get a fresh daily buy signal in the context of a perfect monthly squeeze, then I'll buy a few more of the 105 calls for August. So it's a bit of a patience game here for XLE. And then we'll take a quick look here at Tesla. Oof, Tesla getting spanked. Tesla gapping down about $7 to 170. Now let's compare Tesla to Google, Amazon, and Nvidia from a weekly chart perspective. All right, so here's Google. Beautiful weekly chart. Great structure, great trend, a buy signal, and the perfect 12. You can take that weekly chart and look for continuation higher. Here is Amazon. Same thing. Buy signal, the perfect 12, good structure, good trend. And then Nvidia, same exact thing. Now here's Tesla. It's kind of the polar opposite, right? They had a nice pop after earnings. All that earnings pop did was take it back to the following weekly 21. Nothing about that earnings gap changed the picture here of a weekly downtrend. They pop it into the weekly 21. They never close it above that weekly 21. They never shift the structure label, so structure is still bearish. They never cancel the weekly sell signal. It's got a big 3 score of -10. So I think you can take a lot of important context from your weekly time frame. If I want to trade a daily chart, if I want to buy a 1 hour or a 2 hour squeeze, I've got to take into consideration the quality of the weekly. There's a huge difference right now between, say, a 1 hour squeeze in Google and a 1 hour squeeze in Tesla. If you can find a 1 hour squeeze here in Google, that's in perfect alignment with your bigger time frames. That means the probabilities of that 1 hour squeeze firing to the upside, they're pretty strong. The monthly chart supports a push higher. The weekly and the daily charts, they support a push higher. You can take that 1 hour squeeze and play that in the direction of the overall trend. Where Tesla, this 1 hour squeeze, not really in alignment for a push higher with your monthly and your weekly charts. So Tesla getting spanked, and yeah, I'm gonna have to avoid Tesla here moving forward. Under that weekly 21, and they'll be under the weekly 50 and the daily. The daily 50 and the daily 21 this morning. So the next time I would look for a long here in Tesla would have to be on a weekly close, back above that weekly 21. Then I think they can do something to the upside. Until then, it'll be a little bit too tricky, a little bit too counter trend. But all right, folks, that's what I got for you this morning. The theme of the day, the theme of the week. Can the Bulls keep the progress they made last week? And from that perspective, I think you should welcome the dip. We can learn a lot more about the market through that dip. Can that dip hold the 50? Can that dip hold that 21? Or does that dip see the Bulls giving back all that progress? If they give back all that progress, yeah, we got a lot of 3-day squeezes. They're probably not ready to take those 3-day squeezes for a push higher just yet. If they can defend that daily 50 and then turn the corner and keep the push going, then I think the odds increase eventually. Could be this month, could be next month or the following month, but eventually they might want to take that 3-day squeeze for a push into a brand new all-time high. So it is very much a day-by-day, week-by-week kind of market. Daily 50 for the QQQ, daily 50 for the SPX, and then 900 for NVIDIA. You got to hold that 900. But all right, guys, any questions, anything you want to take a peek at, let me know. Couple scan results for you. There is LMT, Lockheed Martin, very nice daily squeeze. There is Raytheon with a slingshot squeeze. And then PayPal came up on the scans last night. It's a brand new signal, so that might need a few more days to develop, so to say, but not too shabby. Good structure, 10 out of 12. I don't hate that. I'm not a PayPal hater. All right, good morning, Kurt. Starbucks for a short. And yeah, Florida trader. Tesla's just very news sensitive. Very sensitive to the news. Okay, Starbucks for a short. So it's got the structure and the signals for a great short. I don't love the entry, though. Where I'd want to short it would be somewhere closer to that 21 EMA. That dotted red line, that's measuring 3 average true range moves below that 21 EMA. So a good rule of thumb, the quote-unquote easy part of the move does tend to be the move from that 21 down to about minus 2.5 to 3 ATR. Now, that doesn't mean that Starbucks can't go lower from here. It just means probabilities-wise, it's pretty oversold, and there might be room for a bit of a bounce. So what I think you can do, shift your focus to a lower time frame. Right? Take your entry, take your exit, and control your risk on a lower time frame. And a good example would be this 2-hour squeeze. Short that 2-hour squeeze, and then instead of taking your exit above that daily 21, you take your exit above that 2-hour 21. One way you can control your risk in a pretty oversold name. But the signals are bearish, so I do think you're looking for the right direction here. Groovy Jeff, LMT calls for 517. Yeah, I gotta like the setup for sure. Good looking 2-hour squeeze, good looking daily squeeze. I think the bigger question today, what's going to happen here with the market? If the S&Ps and the QQQ can hold up, Right? They can keep the progress they've made. Then I think a name like LMT with that kind of setup should do really good here over the next handful of weeks. But then vice versa, if the bulls give back all the progress and they totally drop the ball and the market rolls over back towards those recent lows, regardless of how good LMT looks, it becomes that much more of a difficult trade. So I think the first key is trying to figure out, for a 1 or 2 week swing trade, are we going to have the wind at our back from the indices? If it looks like the answer is yes, then I think you trade nothing but things that look just like LMT. Right? Not a Tesla, but an LMT with good trend, good structure, the perfect score, an A plus setup. Keeping it simple, it's an A plus setup. So the one thing you could do is give that a little bit more time to expiration. Maybe instead of the 17th, you're looking at the 31st of May. Give it an extra couple of weeks. Give the market a little bit more time to figure itself out. And then if you can catch that push towards 480, you'll still be in great shape. You'll still get a great bang for your buck. Yeah, and great question. If the bulls get back the progress, will there be rotation? That's one potential outcome. My thinking typically is a lot more. All right, if the market gives up the goods, then pretty much everything gives up the goods. Right, tech goes down, financials go down, healthcare, semiconductors, etc. That's usually a bit more of my thought process. Kurt has Wingstop for a long. Yeah, Wingstop's got some good food. I like the lemon pepper. I'm a lemon pepper kind of guy. Yeah, I like it. I like it. They just fired that daily squeeze, and they got a 2-day squeeze setting up, and that's A plus. And they got a 3-day squeeze, which is also A plus. So it's a nice combination with a triple squeeze. And the 3-day squeeze calls for a push towards about 415. So I like that setup. I like it. All right, folks on YouTube, good morning, Paul. Is CCJ a buy? Is CCJ a buy? Yeah, that's a great setup, Paul. We've got the bullish structure. We got the squeeze. We got the big 3 buy signal. We got a perfect score of 12. That all makes for an A plus setup. I like it. Now, my preference is trying to buy that a little closer to my daily 21. But putting that aside, it's a nice setup. And then better yet, you have a weekly squeeze, which is also an A plus setup. So the more A plus setups across the various time frames, the better the odds of a push higher. So I think CCJ is in pretty good shape here. Okay, Brian, great question. What is the difference between a regular squeeze and a slingshot squeeze? All right, so as far as the big 3 indicator, let's compare a bull squeeze and a slingshot squeeze. So a bull squeeze would be something like CCJ. And what makes that a bull squeeze being a squeeze and a buy signal, all of the criterias come together. Right? The big 3 means trend, structure, momentum. They've got good trend, they've got good structure, and they've got the momentum histogram above 0. So they've got it all. Trend, momentum, and structure. That makes for a bull squeeze. Now a slingshot squeeze, so NVIDIA on the 3-day time frame, we have trend, we have good structure, but we don't quite have momentum above the zero line. So that blue arrow, the slingshot signal, what that tells us is, all right, you've got good trend, you've got a squeeze, you have good structure, and even though momentum isn't quite above that zero line, they're trying to pull it higher. So the slingshot squeeze is kind of the first heads up. Sometime soon, they might get that positive cross, at which point you get the official buy signal, at which point there's a really good chance that squeeze fires to the upside. The biggest example as of late would be the monthly chart from the SPX. So back around April, May, we start getting the slingshot signal. And again, what that says is, hey, you've got a great trend. You've got a big monthly squeeze. You've got really good structure for the bulls. And even though momentum is below zero, it's bottomed, and they're trying to pull that thing higher. So it's your first heads up that eventually they might take that squeeze higher. Then they get the positive cross. That turns into the official buy signal. Then they take that squeeze, push that thing right towards that target. So great question there. You know what, Kurt? Chandler just texted me. I'm going to take a picture for him. Let me take a quick picture of your nice message there. There we go. The picture is sent. So non-emotional trader, the momentum comes from a modified MACD. And I can't tell you the exact settings on the MACD, but it's a MACD. So you can even throw the default MACD on your charts, and that's pretty damn close in comparison to what I'm using here. Yeah, Paul, no problem. All right, Maurice, good morning. VIST, VIST, the VIST. It's got a beast of a monthly chart. It's got a very nice weekly trend going. Okay, so there's a slingshot daily squeeze. We've got the trend. Structure is bullish. They're trying to get that momentum cross. Now, a really important detail, when we get that slingshot signal, how close are we to a positive cross? The closer, the better. For VIST here, we're super, super close. So one more little nudge higher for momentum. We'll get that positive cross. The bulls have filled up their gas tank, and then we'll get the official buy signal. So very close. And then on the 2-day squeeze, it's a great looking 2-day. All right. And we got a buy signal here because we got all three: trend, structure, and that momentum. So good call out. I like it. I like it. All right, folks. I think I'm all caught up in the questions here. Caprice, Berkshire. So Berkshire's got a lot of squeeze action. 5-minute, 15-minute, a 2-hour, a 4-hour, a daily, and a 3-day. But it's a little bit neutral. Neutral meaning not crazy bullish, not crazy bearish. It's a bit more in that development stage, trying to become very bullish or trying to become very bearish. All right, structure label is blue. The squeeze label is blue. The big three signals label is blue. And we got a big three score of 1. Now, with that being said, If they can crank out a close back above that daily 50 and then get a positive shift of the ATR trailing stop, then things become a bit more bullish. If things become a bit more bullish, then you can take that multi-squeeze setup and look for a push higher, I think, with a bit more confidence. Let's go check out XLF. Yeah, so same theme as the rest of the market. They've got that 3-day slingshot squeeze. Let me go check on Goldman. Yeah, Goldman's moving. Goldman, Morgan Stanley, and a little bit of Wells Fargo. Let me see. Weekly squeeze on Morgan. Nice setup. So Morgan's got a nice weekly and a very nice 2-day squeeze. So I'd prefer Morgan over Berkshire for now. Just playing the game of comparison. Morgan Stanley has a big 3 score of positive 12, so the best possible score, while Berkshire has a score of negative 1. Berkshire is neutral on the big 3 and neutral on the structure, where Morgan bullish on the big 3 and bullish on the structure. Got a little bit more oomph to her over there on Morgan. But all right, my friends, we'll call it a session here. We've got an interesting day ahead for sure. And again, the theme today is we appreciate the dip because the dip tells us a lot about the current market. The bulls had 1, 2, 3 good days of action. Now we get to figure out what they're really made of. Can they hold that daily 50? If they can't hold that daily 50 at a minimum, can they hold that daily 21? Time to see what they're made of. So same theme for QQQ, same theme for SPX, and then the big dogs, right? NVIDIA, Amazon, Google. Can they fight the good fight? And the context is, if they can fight the good fight, if they can build on the progress they've made, as the days and the weeks go by, the odds begin to favor that at some point they take all these 3-day squeezes. And the thing about it is, whether it be the SPX, the QQQ, the Dow, NVIDIA, Amazon, if they do fire the 3-day squeeze, that'll see things at a brand new all-time high. So there's a lot riding on that 3-day squeeze. But as always, y'all, thank you for your time. I appreciate you kicking off your morning with me. I wish you all the best of luck, and I'll talk to you soon. Adios.